Ladies and gentlemen, good day and welcome to Entertainment Network India Limited's Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Diwakar Pinde from EY Investor Relations. Thank you, and over to you, sir.
Thank you, Nirav. Good afternoon, friends. We welcome you to the Q4 and FY23 earnings call of Entertainment Network India Limited. To take us through the results and to answer your questions today, we have with us the top management from ENIL, represented by Yatish Maharishi, CEO, and Sanjay Vallabh, EVP Finance. We'll start the call with a brief overview of the quarter and the year gone past by Yatish, which will give a broad highlight of the business trends and what he's observing in the market. And post this, we'll open it for the Q&A session. The discussions that we have today may contain forward-looking statements relating to future events and future performance. Numerous factors could cause actual results to differ materially from those in the forward-looking statements. The company undertakes no obligation to update any forward-looking statement to reflect developments that occur after the statement is made. With that said, I'll now hand over the call to Yatish. Yatish, over to you.
Thank you, Diwakar. Good evening, everybody. On behalf of Entertainment Network India Limited, I welcome you all to our Q4 and FY23 earnings call. This is my first interaction with you all after taking over the current role at Mirchi. It's been 6 months since I've returned, but I'm happy to share that I've spent almost 11 years at Mirchi in my previous stint. Prior to coming back, I served as a Chief Revenue Officer at a leading apparel company. Moving on to the quarter gone by, the headwinds faced by the media industry post-festive last year continued even in quarter 4, impacting overall ad spends in the Indian economy. This has resulted in muted advertising spends across all mediums, be it television, print, or even digital. Large event sponsorships have dried out in the market, and we've seen major events not happening in quarter 4. Inside the radio industry, if you look at, the ad volumes have grown at 11%, while Mirchi has again outperformed the industry by growing at a much healthy 16.7%, leading to a strong volume market share of 23.9% in quarter 4. If you see ENIL's numbers, existing business without digital, we have grown at 2.3% with an EBITDA of 23.2 crores, giving a margin of 22.9% and delivering a PBT positive quarter with rupees 6.1 crores in Q4. If I was to look at on full year basis, we have grown at 31.1% with an EBITDA of 93.3 crores, which is almost 88% growth in EBITDA at a margin of 22.6% and delivering a PBT of rupees 19.6 crores before exceptional items. As you know, we look at our business in 3 vectors, digital, solutions, and radio. So let me start first. We continue to invest and remain focused in growing this segment. Our investments have been very strategic in nature because we firmly believe digital is essential for our future growth and aspirations. We have invested, in line with that, we have invested rupees 7.2 crores in quarter 4, adding up to 26 crores in the full year FY23. I'm very happy to share digital revenue from all our business segments for the year was rupees 33.6 crores, which is almost about 12% of our radio revenues, in line with our aspiration to have digital contribute to 25% of our radio revenues in few years' time. The next is solution business, which has shown exceptional growth both on revenue and margin on full year basis. Solutions has grew at 33.5% to an overall revenue of 115 crores, which are a very healthy margin of 34.3%. And finally, radio, we have grown at 35.7% to rupees 296 crores, consolidating our leadership position by gaining almost 300 basis points in FY23. Coming to our international business, we have rationalized operations in San Francisco, as we have shared earlier. Our focus remains to drive overall profitability in the international market. We have closed San Francisco. We are in negotiations with the relevant authorities in Bahrain to renegotiate our contract terms to make it more feasible. We remain very confident to all our other international business in New Jersey, Dallas, UAE, and Qatar, which are independently profitable and are also growing on revenue. Overall, we are encouraged by the fact that our international business, even after losses in San Francisco and Bahrain in the quarter 4, has delivered a positive EBITDA during the quarter. At overall company levels, if I look at operation of expenses, we continue to remain focused in running efficient operations. This year we delivered a savings of rupees 53 crores over FY20 operating expenses. Our balance sheet remains very strong. Our cash reserves have grown to 265 crores as of 31st March and at a consolidated level at 282 crores. To summarize, I am very pleased with the INAL performance, which has been ahead of its peers across radio and even other mediums, both in quarter and full year in these challenging times. We are satisfied with the improved volume traction in radio, the client advertisers numbers coming back on radio business. Our solutions and digital business are tracking as per plan. The company will continue to invest in digital arena to strengthen our future. With this, I'll conclude my commentary on the performance, and once again, thank you for joining in and listening to me patiently. I'll request the moderator to move towards the question and answer session. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Deepan from Trustline PMS. Please go ahead.
Good evening, everyone. Thanks a lot for the opportunity. So firstly, can you provide the split between these solutions and digital and platform for the quarter 4?
Deepan, any other question also? I'll just note down.
Yeah. So other question, how has been the platform business doing? So what is the kind of metrics we have added over the previous quarter in terms of monthly active users?
Okay. So to give you your answer on the digital content solution, we've done about 10 crores. Digital platform has almost about 7 crores. And digital components in other segments is about 0.56 crores, totaling to about 33.57 crores.
Okay. How do you say this digital platform is 7 crores, is it?
Yes. We're just starting up. That's what we said. We have just started up our digital platform business.
So because last quarter they did 1.8 crores, so the same we are referring is now as 7 crores, right?
Yes. This is a full year basis, I'm saying.
Oh, no. Quarter four I need.
Okay, I'll just give you quarter 4. While I answer your second question, on the platform side, our MAUs are about 4.6 million on both MWeb and the platform. So if you look at the MWeb level, it's about 4 million and at 0.6 on the app.
Okay.
On the quarter's numbers, the digital content solution gave 2.25 crores, digital platform 3.34 crores, and digital components in other segments is 2 crores, totaling up to 7.7 crores.
So this platform alone, how much it has done?
3.4 crores.
3.4.
3.4 crores.
Okay. So sir, thanks a lot. I'll come back to you.
Thank you, Deepan.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of P. Suresh from Burma's Financial. Please go ahead.
Thank you for your opportunity. Hello?
Yeah.
Sir, your takeover from Hyderabad-based company it is a cash deal and the stock swap deal, sir? Hello?
I'm sorry, Suresh, I think you are mentioning some other company?
Not mother company, sir. You are takeover for some other Hyderabad-based teaching company, ENIL takeover.
You are mentioning about Sparda, which is Pune-based? Sparda? Not takeover, we invested in Q3 in Sparda, not in Q4.
Sir. Yes, sir. It is a cash deal or stock deal?
The cash deal. It's an investment.
Investment. Okay.
Investment.
How much? you can, how much stake you have in that company? Stake. How much?
I'll ask Sanjay, our head of finance, to answer this.
Mr. Suresh, thank you for asking this question. First of all, this investment happened in Q3 of the last financial year, and it was a cash deal. And all details of this investment has been uploaded in the NSE and BSE sites. However, for your ready reference, we have invested approximately 7 crore to get about 11.5% of the equity.
Sir, one another question, sir. Actually, ENIL is continue loss making before after Corona. Next financial year will be it is profitable.
So, Mr. Suresh, this is company policy not to provide any future guidance, and we are sorry, but will not be able to give you any kind of revenue or EBITDA guidance at this moment.
Thank you. Suresh, I'll look to join the queue again for a follow-up question. Participants, you may press star and 1 to ask the question. The next question is from the line of Subrata Sarkar from Mount Intra Finance. Please go ahead.
Yeah, a few questions from my side. First is on the radio business. You have grown by 13%. I'm talking about Q4.
So voice is coming little muffled. Can I request you to speak through the handset?
No, I'm speaking through the handset only. So am I audible right now?
Yes.
Yes, Subrata.
Yeah. So first question on the radio side, basically. So you have, I'm talking about Q4. So we have seen a growth of 13% on the radio side. So if you can give a breakup, like how much because of like increasing the volume, and how much is the pricing because and what is the pricing change, and if you throw some light on the pricing issue, because whatever I have understood, like we are still way below the pre-COVID level in terms of pricing. So if you throw some color on this, and like how you are seeing this environment to build up, this is one thing. Now another thing, like in terms of ad revenue, I'm talking about radio. So like if you can highlight like what is our government, what percentage comes from government spending, and are we, because of the election and the next year election, are we anticipating a build up on that side? This is the second question on the radio side. Now coming to the non-radio portion, that is our non-FCT as well as digital. So this quarter has been really muted in terms of non-FCT, and which is just against the trend which we were experiencing till last quarter. Like there was some improvement. Like I'm giving your data. Like this time, if we leave apart the digital part, like events and all those things, they have done really bad. Really, the things has not fired. So is this a one-off? And particularly, like things, if you see the full year result, that has improved, and we were seeing some event side. So is this a one-off, or like we are still anticipating this kind of a muted environment and response from that part of the business? So and last, in terms of digital, like how we have spent 7 crore this year. So what is our plan to spend next year, entire full year? What kind of expenditure we are planning to make on the digital side? And on the accounting aspect, like would we use all those expenditure directly, we will charge on the P&L, or we will we will capitalize it to some extent? This is the initial questions I can come to.
Thank you, Urata. I thought four were too many, even though they are initial ones. So let me answer one by one. The first one, you asked me the price and the volume. Yes, the growth has been volume-led, but happy to share that the price has bottomed out. We have seen a marginal increase in price, which I would not term very major. It's almost about a percentage increase in the price, but it's largely volume-led. Our capacity utilization has improved by about 12%. So it's a volume-led growth. to give you a perspective on future, I believe it will continue in the first 6 months the same. In media, generally the pricing changes in festive when when the demand is much higher. So I don't see in the next 2 quarters the price going up very, very differently. And it will be volume-led growth, and being as a leaders and with headrooms available, we believe it will give us good market share also and consolidate our position. Price could be in the second half of the year. So that's the first one. The second is on government. You asked me. The government contributes about 10% of our volumes. Yes, you are right. When elections happen, when general elections happen, generally the business from government goes up. So we believe in the second half, and not just second half central government, but with the heavy state elections calendar also, there will be about 5 state elections. There also the business will also go up. So we do expect government business contribution in this year will go up, as has always been in the last year of central government. So that we believe it will go up. Right now it is 10.4%. The third is on non-FCT. Yes, you are absolutely right to bring this, that the event business has been very subdued, though at a full year basis we did really well. If I was to give you in the solution business, there's only one element. The way we define solution business, the event business has not fired, but other business, which is the TV properties business, has not fired, which are our large events like Mirchi Music Awards in different languages. We were not able to do it because there has been a very, very subdued environment in the market of sponsorships. To give you a perspective, if you look at any large awards in the movie awards or large music concerts have not happened in Q4. Be it, to give you certain names, it's a large event. Filmfare, IFA got postponed. Supersonic was a loss-making event. So a lot of large events have not seen traction, which are one-day sponsorship events. So barring that, if I was to give you some numbers, our solution business without the TV property, which is large chunk in Q4, has grown 82% for us. So that's the business we have seen in the solution business. So we are very confident that the solution business will continue to grow. We believe this is one-off because of the global recession pressure and the overall advertising sentiments have been a bit subdued. It remained in Q4 like this. But going forward in the next half, we believe post Diwali this should come back and we will be having the same numbers. So to answer you on this TV properties, I believe it is a one-off quarter for us like that. On the digital, I'll ask Sanjay to answer, but just to tell you, yes, we believe we will continue investing in digital the next year also. We believe that's important to be future-proof on the market, and we will continue in the same lines. We have always been very patient spenders. We're not like a VC funded where we just want to burn money, but we have a camel strategy where we go very, very specific and a very strategic in nature investment we do. So in line with what we have invested between 25 and 30 crores, we should invest in the same manner next year also. Regarding the capitalization, I'll ask Sanjay to answer this.
Yes. So, Subrata, what happens that whatever we invest in digital part of the business, we charge off everything, whether it is for creation of content or otherwise, everything to the P&L in the relevant month and quarter. We do not go the capitalization route at all.
Okay. And sir, we will continue to do so, sir.
Yes, we will.
And we have seen traction also. So if you look at our numbers, what are the projected numbers for ourselves in the first 6 months? It's just been 6 months if you look at. So it's not been a long journey, it's just been 6 months. And if you look at digital, is always the investment goes initially and then you see a hockey stick type of returns coming in. So we have started seeing traction. We have just opened up on advertising on our own platform. And we firmly believe it will deliver us our expectations in the coming years also.
Great, sir. Sir, just 2 questions. One on the non-digital that solution side. Sir, do you think, please correct me if I'm absolutely wrong, but is this, you have mentioned other cases also, so is this related to the hyperactive advertising scenario in the sports and IPL scenario? So in is it hampering number one our kind of a business in terms of sponsorship? And if so, do you think this is more of a timing issue, like during once that get over, or let's say in other quarters when those events are not there, we may get back to the normal level? This is one on the FCT, non-FCT, non-digital side, and second, sir, on the digital side, if you can throw a little more color, like how we are thinking of like monetizing it. Is it entirely advertisement, or we have thought of some different model? So anything on, if you can throw some color on the like how would you like to monetize the digital asset of our company?
Okay. So let me answer you first on the non-SCD part, which you said. Yes, this year has been a tough year. If you look at, all industries, see, media is dependent on other industries, how they perform, because the other industries spend on media. Media is also one category which spends on media. But all categories, if you look at Q4, has been a bit subdued. So the marketing spends goes down when the markets are not, when all industries are not doing well. So we are dependent on from that perspective. So I would put it across to, the global fears of recession which were there, which didn't impact India largely, but there were certain fears, and people then at that time tightened their purse strings to spend. So I believe Q4 became the issue with that reason. Otherwise, I don't see it happening every time. We are not, this is the first time in 14 years we were not able to do it. So IPL has also been in the same time. So it's nothing to do with sports that this type of events don't happen. Sports and entertainment both are bread and butter for Indian consumers. So they look at both the events very differently. So I don't think either of them I would say they complement each other. So I would not be worried about the sports investment happening, and that's the reason the entertainment spends have not happened. It's largely with the overall market sentiments. So that's on your FCT, if I've answered it. The second on the digital thing, as I said, it's a combination of revenues what we do. So there are three things that platform, when you own a platform, you get consumer data, so you can monetize on those basis. You put up stories, it could become subscription, it could become advertising funded. So it's a combination of strategy, and also with our social media assets and everything going up, our solution business also gets helped by this social media assets. So our revenues from solutions also increase. So I would not say that one strategy, it's a mix of 3-4 things. Last quarter, we also spoke about our audio inventory platform, MPing, which also gives us additional revenue. So our digital is a very cogent strategy which covers both revenue from the platform plus advertisers also.
Thank you very much. The next question is from the line of Ansh Manek from Equirus Securities. Please go ahead.
Good evening. Thanks for the opportunity. Sir, with respect to the radio revenues, if we want to compare the realization to the pre-COVID level, what would be the discount level?
That's about, about 35%. On the quarter basis, and it's compensated by the increase in volume, which is 36. So the volume and price have complemented on these lines.
Okay, got it, sir. And the second part, sir, we understand with respect to Q4 trend regarding the headwinds for the advertising spend. If you can share the outlook for the outlook register of April, so it would be really useful.
And generally we don't, as Sanjay had also mentioned before this, that we don't provide guidance. But to give you a perspective, it's been in line with expectations.
Okay, got it. And the third part was with respect to the capital allocation. So we have healthy cash balance. So if you can share the capital allocation part.
So can you be more precise with your question, Ansh?
Yeah. So I understand that most of the cash may be used for the investment purpose, right? So whether the investment would be in the business of radio or more towards the non-solution, solution-based business.
Okay, Ansh. So the entire cash balance currently, as we close the year, stands at 265 crore. And as you know, that radio as a business is always, front-loaded in terms of heavy capex investment, which the company did. Now we are at the very sweet spot of being in the middle of the 15-year term. Most of our stations have just covered 7.5, 8 years of the license period of the current license regime. Coming back to your question, basically our capital allocation will be completely guided by the company's investment into the digital space. That is anyway the new stream of the business coming up, and we expect to invest similar amounts which we did in the last financial year. And other than that, our overall working capital management is going to be tighter. We are collecting our debts better. We in fact collected the debts far better than we did last couple of years in FY23. And therefore, you can expect some kind of decision coming out of the management of the company in coming quarters. Though we are not in a position to give you the right details of that or intricate details of that, but there are a lot of discussions happening in the company within about the allocation of the cash we have in hand.
Okay, perfect. Thanks.
Thank you. Next question is from the line of Samir from Prince. Please go ahead.
Hello. Yeah, I just want to understand that currently what loss we are having of other businesses or discontinuing businesses. How long this will continue and how much is yet left to write off?
So let me take this question, Samir. Basically, the impact you are seeing in our current year financial about the exceptional item that represents the losses we have faced in international business, nothing related to domestic operation at all. So let me tell you that based on the conservative accounting assessment, in line with our auditor's assessment as well, we have taken the entire hit in the FY23. That amount stands at 17.78 crore. And currently, we do not expect any further value erosion in terms of net worth to happen in FY24.
So if you look at, Samir, both domestic and international, even in international business, whatever we have closed on has happened in FY23. We don't foresee anything in FY24. So I don't see any further losses in existing business happening.
Got it. And any chances of an uptick in the prices of our radio business? I mean, the ad revenue, are we increasing that or will it remain stable in FY24?
I mean, the way, as I said, I was answering earlier, in media, it's not like other industries that you increase price any month. It generally, anyway, it's a volume-driven thing. As the demand increases, you can always increase price. And generally, this happens in media that the prices go up just before the festive period. That's when the demand starts. So I would say, end of first half, early second half is when it starts looking at. So generally, the first quarters are not where the pricing goes up. So I would be a bit wary to say that the price might go up in quarter one. It will remain. Happy part is that we have now bottomed out in the last year. We have gained price in quarter four, though marginal, and we believe that the story is going to go up. Very happy to see a lot of clients coming back. The clients are much more than they were at pre-COVID levels. So the client attraction to the medium is at an all-time high. The volumes are at an all-time high. Yes, price remains a concern for us, but I believe it will take few years to go back to the pre-COVID levels. It's not going to happen only this year. It will happen over a few years. And to start with, it might happen in the second half of the year.
So are we
large volume headroom? So if there is money on the table, I would rather have play the volume and then not let go the revenue in the current situation, the current market situation.
Got it. Just the last question. Are we working to reduce cost accordingly? Because since the prices are stable or not going up?
Yes, that's a continued thing. Be it, even if the price was going up, we are very, very clear on running a very efficient operations. As I mentioned in my opening remark, we have saved almost 52 crores against pre-COVID levels. So it will continue doing that, and we keep innovating. Anything which COVID has, the only positive of the COVID has, helped us to relook at our all models again. So we keep reinventing our wheels, thinking how do we start business, how do we do business today, and making our operations more and more efficient. So as we said in FY23, we saved 53 crores, and that will be a continuing thing even in FY24. we run a very tight ship.
Great. Thank you so much.
Okay.
Thank you. Next question is from the line of Shikhar Mundra from Evoke Commercial. Please go ahead.
Yeah, just wanted to understand what would be our EBITDA without the digital business in FY23?
Just a moment.
In FY23 would be 93.3 crores, which was a growth of 88% at a margin of almost 23%.
And what would be the split of this 93 crore between the traditional and the solution business?
Yeah, just a minute.
₹40 crores is non-FCT and 50 you can take it as the radio business.
I'm sorry, I didn't get you.
40 is non-FCT.
Okay.
And the balance would be on the FCT side.
Okay. And how much have we invested in the digital business till now, like till date, since we have started investing?
About 30 to 35 crores.
I mean that was this year's investment, right? Or I'm asking about the total investment, like in digital.
Total investment. I said total investment.
Oh, okay.
Total. Only last year in the end of the last year. Okay. So largely investment happened in this year only.
And what was the revenue from the digital this year?
Total revenue, as I said, is about 10%. If I consider total, it's the 10% of our radio revenues. 12%. About 7.93 crores.
7.93 crores. And what's our plan? Like, and so what is 30 crores? Where have we exactly invested? Like, is it to build?
That was Q4, I said 7 crores. Overall digital from all segments was 34 crores.
34 crores, okay.
For the full year.
Okay. So if we have invested like 30 crores till for the year and 34 crores the revenue, so isn't digital also at a break even, or are we making losses in digital? How is that working?
So the way digital is, as I said, the composite revenue from all our business segments. We are investing in the platform. The platform has given about 7 odd crores this year. Only the platform revenue. But if you look at the digital revenue of 34 crores, okay. 10 crores come from our content solution. You know, we do shows like What Women Want, Kareena Kapoor Khan show. That type of shows we have given 10 crores. The platform has given 7 crores, which is where the larger investment is happening. And digital component from our solution business gives us about 16 odd crores.
Okay, all right, got it. So, and where is the 30 crore exactly invested in? Is it to build up your YouTube number of followers, your social media followers? So, where is that 30 crore invested?
Couple of things we're doing on the platform side. Build a platform, build an app. So there is a lot of on the tech side which had happened, which largely has happened in FY23, which is a continuing thing, but major investment happened in FY23 there. Then you're making your content bank. You know, we have about almost more than 3,000 hours of stories content available on our Mirchi Plus app. Okay. So investment goes on that side also. Apart from, you know, we do very less performance marketing. Unlike other players, we are not. We're playing a patient game. We don't want to just burn money and gain more and more subscribers, because that may not be the right way to do it. And so we have a very less on the marketing, but it's largely content acquisition, content making, and the tech side.
And so what's the plan? Like for the next year, I understand that we plan to spend more 30 crores. So that is also mostly on the content acquisition side only?
Yes. So we want to build the content. Now we have just started opening up our platform for advertising. So far we were, just building content. You need to build some critical mass before you really go and get the numbers right. So we believe another year or so we give you that, and the revenues from the platform will start trickling down in this year. And hopefully FY25 we will see much more healthier revenues from the platform. Digital revenues will continue to grow from all segments, but from pure platform, it will take a year and a half. And you've seen, as the numbers grow, then the revenues give you a hockey stick type of growth. And initially it will be very, very trickle down.
All right, got it. And what's the plan for the content? Like, how much content do we plan to acquire, or is it, or will the rate of content addition slow down after a couple of years? Like, what's the plan there, side?
See, it's been very, very early days for us. We keep running a lot of experiments, and you keep learning every day. We have been very concentrated on certain languages. India is a large country with so many languages and all. So we reworking on the strategies. I would not be in a position to share how many hours and all right now, but yes, we look at opportunities, white spaces available in the market, which languages are doing well. So it's a non-music platform which we are working on. So it's on podcast, stories and all. We see, even if you look at any report, they're going to grow big time. And that's the reason we want to look at all languages, figure out which are the white spaces where we want to grow. And from that, we design our strategy to look at the content.
Okay,
but it will keep growing. So we have in-house also and outsourced. Not everything is outsourced. It's not actually acquired. We have a strong 300-member creative team who also helps us driving this content, and then we also acquire. So it's a mix of both.
All right, got it. And on the capacity utilization side for the radio business, so what would you say the capacity utilization for FY23?
See, we were about 69% at a CU level this year, which is, to give you a perspective, it's at 13 minutes an hour for 17 hours. So we still have a lot of headroom available. And I think Mirchi is at the best space in this with the headroom available to utilize all the volumes coming in the market, though at a lower price, but competition doesn't have so much volume available. So we are really in a very sweet spot right now at a 70% capacity utilization, and which I said, is measured at 13 minutes an hour for 17 hours. So a lot of inventory is still available for us.
Okay, all right, got it. Okay, thank you, and all the best.
Thank you.
And one last question. Just one last question. Hello.
Yes, sir.
Yeah. So, and on the stock price front, stock price has not been doing well, and so are there any plans of doing buybacks to create value for shareholders? Because we have the cash available also.
Shikhar, not in a position to disclose that. We keep discussing with board. I hope you give us recommendation that people will keep buying.
Okay. All right. Okay. Thank you. Yeah.
Thank you. Next follow-up question is from the line of Deepan from Trustline PMS. Please go ahead.
Yeah, thanks a lot for the opportunity again. So just want to understand the price realization difference between our Mirchi Plus app ads versus the YouTube ads which we were realizing earlier.
Deepan, it's very difficult to quantify because it varies at a different level. I can tell you on the margins. Whenever you sell your own inventory, the margins will always be better. Revenues is a function of, we've just started doing it. So YouTube has been built, our social media assets on YouTube, Facebook has been built over years. So it takes a time and there is a well-oiled machinery which is selling it. But I can tell you the margins are always better because it's your own platform.
Okay. And so the digital business, excluding platform for this Q4, looks like it has fallen from the previous year and last quarter also. Is there any specific reason for that?
Give me one second. No, can you repeat it?
The digital business portfolio revenues, excluding that platform number, so have you seen some decline? So what is the reason for that?
No, I think the TV properties contribution would have gone down. That's the only difference I would see the digital business going down, because the TV properties business didn't do well. So the element from TV properties would have gone down.
So that comes as part of the solution overall, right? So yes. The erstwhile digital which we were used to refer even before platform, that used to be in the range of 7 to 10 crores quarterly run rate. Right, so that if we exclude the platform also, now that is around 4.5 crores. So that's why.
Yeah, so as I said, large sponsorship events have not happened. So if you look at digital content, we did Gauri Khan show in Q3, Q4 we did a Kareena Kapoor Khan show. So couple of activities we have not done because of lack of sponsorship being there. So from that perspective only, I would say it's been little muted, but otherwise it's been on track, Deepan.
Okay. And how has been the Yamping business doing? So what kind of contribution we can expect this year? And over 3 year period, what kind of contribution we are expecting from them?
Yamping has been very, very exciting for us. It's been just 4 months, Deepan. I don't want to extrapolate to a year, but if you look at AR, it's a very, very healthy. One business we are very excited is about Empring. So I don't want to give you a number for the full year, but yes, it can be in a very high double-digit crore business in few years.
Okay, so what kind of streaming players we have already tied up? So what kind of activities we are doing to scale up this business? So if you can throw some light on that.
Deepan, we have only looked at audio OTT players and we have tied up with most of them. You asked for it and we have all large audio OTT players have been tied up. We are still not open on video, which we can do, but we don't want to do it, concentrate on only audio OTT, and most of the players have been tied up.
Okay, so audio OTT business currently, what kind of ad revenues they are doing currently, and what kind of potential this audio OTT can go up to?
So I'll tell you how it works. If you look at Spotify today, if you consume Spotify without subscription, there's hardly any ads. In India, the way audio OTT or digital has been sold is largely by display ads, or even in audio OTT it's been largely playlists. It could be a Maruti playlist or a Britannia playlist. In-stream advertising has never happened in India. Being the leaders in the audio advertising space, when I say, radio advertising, we have the largest team strength, and I think the potential is very, very huge with our reach to number of cities, number of clients, and our sales force. The potential is very, very high, and I don't see any of the existing streaming players can look at it.
Okay. And so regarding this payout or dividend payout, so we have a huge cash city available with us, and we are spending only 30-40 crores in the digital. So what are our plans to give it back to shareholders in terms of dividend or buyback? So are we forming up some kind of decisions on that front? This has been due for a quite long period of time. Investors have been questioning this for a long period of time.
Yeah, so Deepan, I completely agree with you. You are absolutely right on that point. It is really, we are listening to this kind of comments and questions from the investors for a very long time. We made the board aware of this, but as you will appreciate, this is completely board's purview, and we will be only able to come back to you the moment we get any kind of green signal from them.
Because the stock price has not been moving up because the cash is piling up. So if we do some action on that, our ROEs will improve and stock also will improve on that front. So that is sincere feedback to company. Thank you.
Definitely. Noted. We have already communicated to our board about the investor feedback. We will again get in touch with them about that.
Thank you. That's it from me.
Thank you, Deepan.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Subrata Sarkar from Mount Intra Finance. Please go ahead.
Yeah, just two follow-up question. One is like how much cash flow actually we have generated from this year. Basically, if you highlight the number like cash flow from operation, and then after like how much free cash flow basically after the capex of 30 crore on digital.
Okay, so Subrata, actually we have uploaded our results in the stock exchange sites. So you will get the minute details from that to give you the answer. Our net increase in cash and cash equivalent for the year is 38 crore almost, which was majorly financed by 32 crore from operating activities and about 6 crore from investing activities.
Okay, perfect. So now just if you can help us to understand like if there is some thumb rule, like one thing which we were aware, like generally radio being localized business, generally they do relatively better in terms of advertisement when economy is not really at doing great, basically when there is some pressure on the economy and there are like local, our business being largely local, like the local trade, they try to communicate through this radio. So which is, I suppose there are some similarity currently with in the Indian context when rural demand is not picking up and like there are some pain in the system. So isn't this type of economy is a great thing for us in terms of ad revenue generation, because if what I can remember, like historically we have done fabulous previously during this kind of a scenario. So is it right, or what is the difference this time in this context? And second, sir, if you can throw some light for in this context only, some light, like how can we get as an outsider get some understanding of the ad revenue on radio? It's how can we relate ad revenue on radio to some other parameters which we can look into and get a feel of how it will do in terms of ad revenue in radio?
Okay, Subrata, to answer your question, yes, when the economy doesn't do well, mediums like radio do well. To give you a perspective, pre-COVID, our contribution from large clients or retail clients, both as corporates and retail, what we say, used to be 50-50. Now the retail contribution has gone up by 50%, but it's almost like 65-35. It's the corporates which are not spending, the retail guys are spending much more, which is a very healthy sign for radio medium, because the shop front or the agency, the car agency is trying to spend money at a local level. The large corporates are holding back to manage, because overall markets have been tight, so large corporates are not spending. So you are right, in an economic situation like this, medium do well, but this time it's been a bit different that the large corporates have not spent much, but the retail clients are spending much. As I said in my earlier remark also, that the number of clients are much higher than pre-pandemic also. So that's a very, very healthy sign for the medium. The volumes are very high. The number of clients are very high. So, and they are coming back again and again. So it's a very healthy sign. It just needs, the economy to revive and get the right sentiment to come, and then we leverage the business as we have always done in this medium.
Thank you. The next question is from the line of Ansh Manik from Equity Securities. Please go ahead.
Thanks for the opportunity. Sir, what would be the utilization level last year in case of radio business?
Full year basis, you are saying?
On the quarterly basis, sir.
On quarterly, it was 56. This year, it's 62.
Okay.
Sorry, on all verticals, if I were to say all put together, it was just radio. Against 66% last year, this year is 76.
In case of radio, right, sir?
No. Radio was the earlier number which Yati said. So it was 56 for the last quarter, Q4 FY22, and it is 62.6% current Q4 FY23.
Okay. Thank you.
Yeah.
Thank you. The next question is from the line of Manoj Shah from Laxco Investments. Please go ahead.
Yeah, thank you for the opportunity. My first question is with respect to the pricing. Can you comment on how is this pricing with respect to the pre-COVID?
Manoj, can you repeat it a bit louder, please?
Yeah. Can you comment on the pricing? How is it compared to pre-COVID? Okay. And second, as we have seen, there is a shift from earlier advertisements from print media to television to mobile. So how we are trying to retain customers on the radio basically? So what the industry is doing and trying to retain the customers over there?
So a couple of points on the first on the price, let me address that. As I said, yes, the price pre-COVID level is still down by 35%. But I would say in FY23 is bottom out. In Q4 we are seeing slight uptake on the price. So I believe now we can always look at the price on an upward trend, though it will take few quarters to go to a healthy price, and maybe the pre-COVID levels will take a year or more to come back at that level. So I don't think it's happening in another 6 months. So that's on the price, Manoj. The second, you were saying, if I understood correctly, you mentioning the listeners have moved from radio to digital or TV. See, it's the media in the Indian media industry become fragmented. There is a lot of content available, be it radio, television, OTT, apps. So it's now you're no longer fighting a medium, you're fighting a time of a person. And radio being the most economical medium, it's poor one's medium, it's subscription free, and it's a companion medium, will always remain. And that's the reason if you look at our listenership numbers still persist, and the advertiser interest, the biggest answer I would give is, the number of advertisers are increasing. That means the medium is working and people believe in radio. That's the reason advertisers goes up. So I think the biggest indicator that the medium is healthy comes from when the advertiser is spending money on our medium.
Okay. Now, see, what it used to happen is like earlier, people are traveling, they're listening to the FM radio channels and so on, kind of thing. So now with everything moving back to the mobile, so it's basically to gather, as you're saying, that to get the customer's time or the client's time. So are we saying that the radio or this medium is lagging behind compared to OTT or the mobile? People are spending more time on the mobile and kind of thing. And recently I was reading a news that the FM radio by default should be there in the feature phone kind of it. There is some industry-wide request is there. So anything you are doing further on that?
Yeah, so it's a welcoming thing. Lot of radio listenerships happened on mobile. It still happens on mobile. There are certain smartphones, certain platform where mobile phone was not there. So we welcome the decision. And that's what I would say on the radio, because the listenership does happen on the go. A lot of people mobile has become a very personal medium, and because it's a medium for all levels of all strata of people. It continues to be, and because all consumption happen on the mobile, that is the reason I would say. But otherwise, I said the listenership is still very, very healthy. People do listen at home, listen in cars. The way the traffic is going up, people listening on mobiles in metro or the car listenership. We have done internal research even in cars, even with streaming devices available, your own music available in cars. 85% people listen to music through radio only. Because it's not about just listening to music, it's about, your friend as a jock. It's a companion medium. You get to know about traffic, get to know about other utilities. So the listenership in cars is going up. Listenership in mobiles is very, very high. People are back on road. So radio is a great companion medium. So I would say the listenership is very, very healthy. With this vision of, advisory on smartphones being FM players being compulsory, it's a very welcoming thing.
And how do you see, like, for this current year and maybe extending into next year? We have a lot of elections lined up. So do you expect the volumes to go up, the spending by the government or the political parties?
Yes, always it has happened. If you look at empirical data also, the last year before the general election has always been very, very active on government spends. Not just the central election, because there are five state elections also happened in the last year. So it's always a very, very active season for government spending. And we do believe this year also it will be the same.
Thank you. Thank you.
Thank you.
Thank you. I request to all the participants, you may press star and 1 to ask the question. Anyone who wishes to ask a question may press star and 1. As there are no further questions, I will now hand the conference over to the management for closing comments.
Thank you, Nirav. Thank you once again for joining in and listening us patiently. Thank you for your questions. We work hard to drive E&L revenue and profitability ahead. And good day to you. Thank you very much.
Thank you.
Thank you very much. On behalf of Entertainment Network India Limited, that concludes this conference. Thank you for joining us. You may now disconnect.